Imagine you just lost money on a stock, and somehow the government is like, "Nice work, here's a discount on your taxes." That's basically tax loss harvesting. And yes, it's as wild as it sounds. So here's the deal. When you sell an investment for less than you paid for it, you've got what's called a capital loss, which is just a fancy way of saying you took an L. But in the investing world, that L can actually cancel out your W, meaning your losses can wipe out your gains, so you pay less in taxes. Let's say you made $5,000 on one stock and lost $3,000 on another. You'd only owe taxes on $2,000 of gains instead of the full $5,000, which is basically the government letting you use your bad luck as a coupon. Now here's where it gets even more interesting. If your losses are bigger than your gains, you can use up to $3,000 of those leftover losses to reduce your regular income taxes too. So even if your portfolio is having a rough year, it's kind of like turning lemons into a small but very satisfying tax lemonade. But wait, because of course there's a catch. There's always a catch. The IRS created something called the wash sale rule to keep people from gaming the system. If you sell a stock at a loss and then buy the exact same stock back within 30 days before or after the sale, the IRS throws a flag on the play and disallows your loss. Think of the wash sale rule like trying to fake return a gift and then sneak it back home. The IRS absolutely sees through it. You have to wait 31 days or buy something similar but not identical to keep your loss valid. This is also a strategy that works way better when you're thoughtful about timing, especially near the end of the year when people start looking at their portfolios, like a report card they didn't study for. A lot of investors do their harvesting in November and December, but honestly, you can do it anytime the opportunity shows up. Here's something people often get wrong. Tax loss harvesting doesn't mean you're permanently giving up on an investment. You're selling it to lock in the tax benefit, and then you can buy something similar so you stay invested in the market while the clock runs out on that 30-day wash sale window. For example, if you sell an S&P 500 fund at a loss, you could temporarily buy a total market fund instead since they're similar but not identical. It's like swapping your regular sneakers for slightly different sneakers just to technically follow the rules. And honestly, respect for the hustle. One thing to keep in mind is that this strategy helps you more the higher your tax bracket is. If you're in a lower bracket and paying 0% on long-term gains, harvesting losses is kind of like using a coupon at a store where everything is already free. Technically fine, just not that exciting. But for someone in the 20 or 23.8% capital gains tax bracket, shaving off thousands in taxable gains can mean hundreds or even thousands of dollars staying in your pocket. Over decades of investing, that compounding effect of keeping more money invested is genuinely significant. Robo-advisors like Betterment and Wealthfront actually do this automatically for their users, scanning your portfolio constantly like a very diligent robot accountant who never sleeps. If you're doing it manually, you just need to stay organized, track your cost basis, and know what you paid for everything. The real beauty of this strategy is that it doesn't require you to change your investment goals or your long-term plan at all. You're just being smart about the timing of when you recognize certain losses, which is the kind of boring, but powerful move that separates people who build wealth from people who just hope for it. Tax loss harvesting won't make you rich overnight, and it's not some secret loophole that Wall Street is hiding from you. It's just a rational legal tool that rewards people who pay attention. The IRS literally built this into the tax code, so you might as well use it. If you want to dig even deeper into strategies like this and see how our company can help you make smarter financial moves, go ahead and check out our links in the description.